Never overlook the power of simplicity. Robin Sharma. That is what we're about here at chartingwealth.com, the power of simplicity. What do we look for? We look for trends. Trends don't usually fool you. Why? Because they show us what's going on in the market, which way the market is heading, investor sentiment. The only thing we care about is price movement. We don't care about what they say on the news, and there's all those quotes from Wall Street that are well said because they speak so much truth, such as buy on the rumor, sell on the news. We don't look for rumors. We don't pay attention to the news. We pay attention to price movement, and only the charts show you that. The people who are selling you the news are selling you commercials and advertisements. That's why they dress up so fancy. They have the good lighting, the pretty hair, all the graphics, the music, breathless reporting, where they'll say one thing 1 hour and the complete opposite the next. You're wasting your time there. Follow trends. Weekly vertical crossovers is what we look for. That's when our price percent oscillator, which is a percentage version of the MACD, the moving average convergence divergence indicator. If you're using charts that don't have the price percent oscillator, my question, why are you using them? Are they free? That may be why they're free. We use TC2000, which is the paid version of freestockcharts.com. We have a discount for you. If you'll follow the link in the show notes, you'll get $25 off. Give it a try. You will love these charts. I've used them for years. I think they're the best out there. Now, let's jump into these markets. We see stocks, both our stock indexes, the S&P 500 up for the day, 1%. We see the Qs up big time today, 2.13%. We see 20-year bonds are down, and gold is up 1.18%. Now, let's jump, as we always do, first into the S&P 500. You see that weekly vertical crossover all the way back on the 8th of May. That's the week ending the 8th of May. Weekly vertical crossovers always end on a Friday, unless around like the 4th of July this year, the market closed for Friday, so it ended on a Thursday. Otherwise, it's a 5-day candle. Represents 5 days of movement. We are 3 days now into the latest candle, and look how big it is. Nice big candle, well above our weekly trend line, moving up quite strongly. We look at the derivative oscillator, which is a triple smooth version of the MACD. It's a leading indicator as opposed to the price percent oscillator being a lagging indicator. We see that it is gaining momentum. That means that price is accelerating upwards, and that is good for continued movement. So we leave the weekly, we go to the 2-day. Now remember that 2-day crossover, what we call a recross. We saw the 2-day chart roll over and then cross back over in the direction of the weekly chart. That's what we call a recross. That was our jumping in point. The 2-day candle representing Friday and Monday. That was Monday. I guess that was Friday the 1st. What was that? Friday, what would that have been? That would have been, was there a 31st? I guess the 31st of July, and Monday, the 3rd of August. That's what that candle represented. At the close of that candle on Monday afternoon, we had what we call a 2-day recross. And since then, we have had a beautiful up movement, jumping in point somewhere around, and again, we're using the Heikin-Ashi candlesticks, 326.43, sorry, 326.43 to a high of 347.86 since the 3rd of August up until this latest 2-day candle. Is that not beautiful? Is that not a beautiful gain? That is. Hope you were practice trading that. How easy was it? Quite easy. Now the trick is knowing when to get out. That's what you come every day to train for. If you don't have the book, Charting Your Way to Wealth, you need it. You'll see a link to purchase it in the show notes. We've got an autographed copy waiting for you. We'll get it out to you. Look at the half-day chart. We can see that it is continuing to move up quite nicely, just marching right up that trend line, well above the half day, well above the 2-day, and well above the weekly. So again, quite nice. Price percent oscillator spiking up, derivative oscillator looking quite beautiful. Now let's go to our latest 2-day recross. We'll check that out in just a minute when we get to the 2-day chart, but look at that weekly candle heading up. Price percent oscillator moving up, derivative oscillator same. Go to the 2-day. We had that 2-day recross going up. When was that? It was to close the market on Friday around 350 this past Friday. And of course, what do we see happening? First day of the latest 2-day candle going up quite nicely, jumping in point somewhere around the 278.50. How high have we gone so far as of this latest 2-day candle? 292.22 from 278.59. Not too bad. Not too shabby in 3 days. Not bad at all. And again, the beauty of the weekly vertical crossover coupled with the 2-day recross. Now the 2-day recross, not my favorite. Weekly verticals are much safer. Why? Because it's a bigger chart. That's why we like big charts. 2-day is a decent sized chart. Somebody asked me about using the 1-day chart. Hey, the smaller the charts you use, the more likely that trend is a shorter-lived trend. That's the reason that we use the bigger charts, and we like them. What's up with the half-day chart? Up in the morning, further up in the afternoon. Look at that price percent oscillator spiking up, derivative oscillator moving up. Nice. So we'll continue to watch, see where things are. The trick is not the jumping in point. That's easy. It's knowing when to get out. That's what you're training for. Now, what do we see on 20-year bonds? We see that they are down for the day. 0.3, having a hard time seeing that. Let's see, 0.38%. So we look at the weekly chart so far. We have a solid green candle. That means a slowdown in the down movement, still below the weekly. We do see prices above the 2-day. We'll check that out in just a minute. Price percent oscillator still heading down, derivative oscillator heading down. So as far as our main indicator, the price percent oscillator goes, still looking decent. Same on the 2-day chart. We look at this latest 2-day candle, and of course it's a down candle, hasn't hit where it plumbed to the bottom, I don't think. Let's look at the low. 163.16, where are we here? 163.28, pretty close. Remember, it had sort of started bouncing up on us. It's nice to see it starting to move over. Just the first day of the latest 2-day. We'll keep seeing which way it goes. And again, that's nice to see. And remember, we did have that 2-day recross going in the same direction as the weekly back on the 11th. So we'll continue to watch, see what there is to see and learn there. And we see at the end of the day, we had the blue line cross over the red line. That is a crossover on the half-day chart. So looks like it did that right at the end of the day. It did. So again, not super strong, but it did so. So we'll go ahead and record that, see if that sticks, because if the market pops up in the morning, that'll pull away and we'll redraw that as appropriate. So that's where we are as far as bonds go. Lastly, we go to gold, up 1.18%. Now again, gold peaked back on the week ending the 7th of August at a high of 194.45. Remember, GLD is set up to track the price of gold at 1/10 of what its spot price is. Again, this is an ETF. We're not saying it's exact at all on that. That's the way it was originally set up, at 1/10 the price of gold. But as we watch, we can see that over the last 3 weeks, it is slowly headed down. It was nice to see an up day. Price percent oscillator is still positive, hasn't crossed over. Derivative oscillator is still positive and has been losing momentum since the peak back on the week ending the 7th of August. August. Look at the 2-day chart. We have a green spinning top. Indecision is what that shows us. Price percent oscillator is losing some of its downward momentum. Derivative oscillator flat. And again, price is still below the 2-day. So, and we had that 2-day crossover going down, which took us at least at that point. If you hadn't gotten out, it darn sure took you out of the uptrade in gold. What are we waiting for? To see if there's going to be a 2-day recross going up in the same direction as the weekly, or if the down movement's going to be enough to eventually pull the weekly over going down with a weekly vertical crossover going down. It's going to be one or the other. Either gold's going to go up or down in the future. Either one will be standing by ready. What do we see on the half-day chart? It's trying to cross over going up after all that up movement today, both in the morning and the afternoon. Derivative oscillator, barely negative. Price percent oscillator trying to cross over. We'll continue to watch and see how things go. Folks, that's where we are as we end the day. If you don't have our book, you need it. Charting Your Way to Wealth. Follow the link in the show notes. Hey, if you want the special trainings we put out every day, we've got a great one for you today. It's on liquidity, a key to your success, about how important liquidity is. If you are not keeping yourself liquid as far as your practice trading goes, and you don't even understand what that means, you got to take that training. It's available for everyone who is a subscriber. What does it cost you to be a subscriber? Oh, the amount of time it takes you to go to chartingwealth.com, put in your name and email address. We never spam that list. We never sell it. It's just for sending information to you, particularly our daily reviews and our once-a-week weekly review and forecast, all the special trainings, plus the daily market worksheet, weekly market worksheet, and trade worksheet PDFs just for you. My friends, thanks for being with us. God bless. We always love to hear from you. CW@chartingwealth.com. While you're at our YouTube, go ahead and subscribe. Helps us with our metrics. And again, if you're very interested in learning about options, we have the best options course out there. It is called Options Made Simple, Parts 1, 2, and 3. Options Made Simple, the Charting Wealth Way. How do you get it? You become a Patreon supporter. 3 different levels there. The first level, $1 a day, $30 a month. If you appreciate what we do, you tend to see things stay around that you support. And if you appreciate what we do here, show us a little love. Go to our Patreon channel. You'll see a link in the show notes. Sign up. We'll immediately send you parts 1, 2, and 3 of Options Made Simple. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.